This one is a good investment, especially for younger people. If you're in your 20s, or you're just starting up employment, or you are planning, you're just here again with a new video, which I'm sure it's going to be valuable to a number of you, especially when you think of investment, beginner investors, because that's the people I come across a lot. And so stick around, and if you haven't subscribed, please hit that subscribe button down there before we continue. And be ready with your pen and paper, and give the video a thumbs up. So if you're still keeping money in the bank and thinking that you are saving or you are investing, then I think you need to listen to this video very, very carefully. So many people don't know about investment, and they think just having money in your bank account is the safest way to keep your money. What you don't understand is that you're actually losing money when you keep that money in the bank, especially currently with the high interest rates, high inflation rate. Anytime your money is staying in that bank account, you are losing it, since the value keeps going down because of the high inflation. So you need to keep your money where at least the interest rate you are getting is a bit higher than the inflation rate. And for those who don't understand, inflation rate is the rising of prices of commodities and services, which really affect everything. It affects our money, it affects our purchase power. Today I'm going to guide you and show you how you can start your investment journey with as little as 1,000 shillings, and the investment in bonds as well as treasury bills, which still confuses so many people. So if you still have issues with understanding how to invest in bonds and treasury bills, then stick around and you're going to understand by the end of this video. So one of the ways, the safest ways for beginner investors is in the money market funds. So money market funds, as I've talked about it before, is the safest place for low risk investors or beginner investors who are afraid to lose their money, since the capital is preserved when you invest in money market funds. So money market funds basically is where the company invests in treasury bills or treasury bonds. That is government lending, which is very secure. Risk associated with money market funds are very low, and anyone who's maybe afraid of losing their capital, you can start your investment journey with money market funds. And most money market funds, especially here in our country in Kenya, you can start with as low as 500 shillings currently. You can open an account. Even though the starting amount is less, you should always focus on growing that amount. So anytime you have an extra, because you can always top up via the pay bill. So you can start slow but focus on growing your money. And the good thing with money market fund is that you can access your money easily. So it's the good place where you can invest your money for short-term goals. Let's say next term school fees. Accessibility is easy. You just need 2 to 3 days notice and you're able to withdraw your money. At the same time, you are still, as much as you are saving, there's an investment aspect in it, because there's an interest earned. And majority of the fund managers or the companies that have money market funds, the interest rate ranges between 8 to 9%, that is after tax. So there's a guaranteed at least interest rate which is above the inflation rate. And as we said, right now you need to keep your money where you're getting something above the inflation rate, which currently the inflation rate is around 6%. So with 8% you are safe. You're better off than losing money in the bank account. So let the bank be the transfer mechanism, not where you store your money, unless it's just for emergency or money that you for your daily use. But anything extra, make sure you lock it somewhere else, either in a money market fund or bond fund. So the second place where you can invest as low as 1,000 to 5,000 shillings is bond fund. So bond fund, I know majority of you understand it as it's government way of borrowing from the public, individuals or corporates. So since maybe for people who don't have that capital that is required when you're going directly to through the central bank, since the central bank has a minimum amount that you need to invest if you want to invest in their long-term infrastructure bonds. But you can go through the fund managers or companies that are offering money market funds. Those are called fund managers, and invest in bond fund under them. Since bond fund is just one of the unit trust portfolios, a unit trust is the umbrella name for all the collective investments where they invest in money market, equity fund, bond fund. So there are several units under unit trust fund. So when you're investing under bond fund, you don't need to have the knowledge of investment since it's experts who take care of the rest of the investment. You just need to choose and understand how bond fund works. And the difference between bond fund and treasury bills is just the period. Since with treasury bills is short term, 3 to 12 months, you can invest there for short term goals. And bond works well in long term. So anything above 10 years, if you're looking to invest your money 3 years, 4, 5, up to 10 years, bond fund can fetch you better rates of return rather than investing in money market. Since money market has a rate, at least the maximum I've seen recently, it's around 9%, 9.5, that is after tax. But with the long-term infrastructure bond, those that are offered directly through the central bank, the rate of return, as I've seen the recent coupon, it was 13.5%, which is really, really good when it comes to investment. But it has, again, minimum investment amount. If you're going through the central bank, you need at least 50,000 or 100,000. For 50,000, there's tax charged on it, but for 100,000, it's tax-free. So you can still invest under bond fund, and it's a secure way since it's the expert who handle the investment. You don't need to worry about risks. The risk is still low since with government, it's almost impossible to lose money when you're investing with the government. So those are the safest places where you can invest your 1,000, your 5,000, but just understand the difference between treasury bills and bonds, whereby the other one is shorter period and the other one is much longer period, but all of them, they still invest in government securities. So that is the second way where you can invest your 1,000 or 5,000 shillings and get some good returns rather than keeping money in the bank. So if you've not liked the video, like the video as we continue, and also leave a comment below and tell me whether you've invested in any and which company are you investing in. We might join you there. And then the next place where you can still invest your 5,000 shillings or 1,000 is equity fund. Equity fund still falls under the unit trust umbrella. It's just the same way of investing as we said in money market, under bond and tree bills, but now when it comes to equity, there's a bit of risk involved. So when it comes to risk, you all need to know that the difference is just timing. When you are thinking of investing in equities, or in simple terms, this is investing in shares. It's like buying shares but through a mutual fund, a fund manager. So with the equity, you have to be prepared. If you're thinking of investing, as much as the returns, anything with high risk also can fetch high returns. With the equity, the companies don't invest in government securities. This is where they buy different shares from different companies. And with shares, they are really, really unpredictable. You can't tell the price of shares next month or next day. It's a daily investment that is just unpredictable. Because at the end of the day, once you understand how it works, it's a long-term investment. It's not for short-term. If you're looking into 5 to 10 years and above, then you can try. And also just understand the risk is high, meaning you might lose and you might gain. So it's just a matter of risking, but you can only grow by taking risks. You don't have to be so in a safe place. There's no growth in safe places or in comfort zones. We need to risk to grow. So if you have some money and you think you can risk, you can just try, diversify. Try invest in equity market, and you will not regret as long as you understand how it goes. Because at times when the investment value, let's say, it start going down, as an investor, if you're a beginner investor, you should not panic. Just give it time. You might start with a share price of, let's say, 5 shillings, but after some time it starts dropping. You're not supposed to sell off your shares. Just leave it and give it time. it will eventually break even. So if you're thinking of investing 10-15 years from now and you have some money somewhere, think of equity as an option. It's a good option for long-term investors, but not for short-term. If you're thinking short-term, just be safe with money markets. And also the last one is the balanced fund. So when you talk to your fund manager or the company you're investing in, you should also ask about a balanced fund. A balanced fund is where if you select that option, the company, the fund managers are the ones who will do the investment and just balance your portfolio. One time when the equity is doing well, they transfer the returns to now money market, which is safe, and also observe the other side of the equity. If it's going down, they wait. After some time, if it's doing well again, they keep switching funds from money market to bond fund. But now that one you are not in control, it's the fund managers who are in control. They are experts in this, and so you are not going to lose anything. They know what they do. They do a lot of research before investing. So you are safe with such kind of investments. Only invest in what you understand. Don't go into things that you don't understand. I've seen people asking me about forex, trading, cryptocurrency. Don't invest in those things if you don't understand them. Only invest in what you understand and the risk that you're willing to take, because investment is all about risk. So how much risk are you willing to take? So I think for when it comes to money markets or financial markets, those are the best places where you can invest. I think that's what we'll have for today. Leave a comment below and tell me what you'd want us to talk about next, or any questions you have when it comes to investments. So I'll talk to you again in my next video. Have a good day and we'll talk again later.